Accounting systems as a topic is something that actually goes fairly deep, and today we won't cover all of it, but I think it's important that we really talk about the purpose of accounting systems and their definition. And by nature, we're going to go a little further and talk about a different category of software also, called ERP, which we'll get to in a minute. First off, the purpose for accounting systems in general is really for recording and reporting on transactions. We all learn that in our schooling, and that's really what it's all about. These are just computerized methods to help us do that. Essentially, accounting systems are built up from a structural perspective by creating what are called modules, which are places for you to enter transactions, as well as to store basically static information that relates to things that are in your business. For example, modules might be considered accounts receivable, for example, accounts payable, general ledger, inventory management, purchase order. These are sorts of things that are called modules. Within a module, though, you have a concept called a master file. A master file is that static information about, for example, a customer in accounts receivable, or it might be something like a vendor record in an accounts payable file. These are essentially informational buckets that stay forever unless you make changes to them, that are used to then transact business with a customer or a vendor, or about an inventory item or potentially a purchase order, for example. So that's what accounting systems are in a very, very high level. I want to go then into a deeper area, which is what is an ERP system? ERP is a phrase that's used a lot. I know in business people talk about it all the time. Funny thing is, it's three words that sometimes don't make sense to people, so I just wanted to share what they are and kind of why I think it makes some sense if you really dig in, particularly in context of what the CGMA offers. First off, ERP stands for Enterprise Resource Planning. Okay, those are three words which don't always come together naturally, but basically, when you think about the piece, there are the pieces. There are things for managing your enterprise. Notice I use the word managing, not accounting, right? Managing your resources, so ER, resources. What are resources? Well, resources can be people and machines and that kind of thing. And planning, ERP, planning. Planning should be obvious, but think about that. That's a whole lot different than just recording transactions and reporting on transactions, okay? Something else we should understand about ERP, and we're going to focus a lot of our discussion today on ERP, is that they take into consideration various constraints in a business, such as capacity of a warehouse, or how many hours a person can work in a given day, or various other things. How many square feet are we operating in? These are things that are used to essentially help people develop measurements, which again, we want to go back to a strategic plan to develop measurements of how are we doing against that plan. ERP systems are actually the kinds of accounting systems, if you will, on steroids, that provide for pretty serious amounts of information management and planning, okay? It lets us really assess how we're doing in our business and how we're going to be really, able to address the future. So now that we've kind of defined really what an accounting system is versus what maybe an ERP system is, let's use a couple examples on how this might apply to certain kinds of industries or types of businesses. First off, if you look at a manufacturing business, okay, an accounting system, for example, might basically allow you to buy some raw materials and create an inventory record for that. You could create a finished good once the manufacturing is done, and then ultimately kind of record a transaction to show that you have a completed product. At that time, you might add a journal entry or some other way to say basically we had some overhead in it, we had some standard labor costing and that kind of thing. But at the end of the day, you're basically recording a transaction for later reporting on what you made, okay, and what you bought. In a manufacturing ERP environment, okay, there is typically a whole lot more going on. It focuses essentially on a cycle. And you'll see when we talk about other kinds of businesses, this word cycle will come up again. The cycle in a manufacturing business kind of starts with a forecast, right? So often the sales department and marketing department come up with some sort of a forecast of how much they look to be selling in the next year or period of time. From that forecast, the ERP system helps not just store that and help them manage how to create that forecast, because there's many methods of how to. But once that's in there, it moves into the process of, now we have to make that, and we have to buy things to make that stuff with. So the ERP system says, well, now I understand where we're going. I know I need to buy all these things, and we have to make all these things, potentially. Let's go figure out a plan of how to most effectively and efficiently determine how much to buy, when to have it delivered, when to have it made, who's going to make it. When you think about it, who's going to make it is no small feat either. Okay, so if you are a contract manufacturing company where you have someone else make things for you, the ERP system pretty much can determine when to tell those people to make what you need. On the other hand, if you're making it yourself, Okay, the ERP system can allow you to do all kinds of things, which is back to the planning and management orientation of an ERP system, where it'll say, all right, here's our plant. It has this many people that can fit in it. Here's the kind of hours they work. Here's what they do every day. Here's the machines we use. Here's how much capacity they have. These sorts of things, they all are impacting essentially how we determine how to plan for production. Again, ERP is giving you a whole lot of value beyond just accounting, okay, to measure production efficiencies and deal with how effective you are as essentially as a business operator. Another example would be professional services firms. Okay, many of us do work in professional services firms. In an accounting orientation, the accounting system would essentially say, give me the time that people are spending and let me bill it. Again, being very simple, but that's generally what the accounting systems do. They allow you to record the time, record your expenses, bill them, collect them, that kind of thing. Professional services, though, on an ERP cycle, remember that word, really focuses more on starting with the concept of start with a project plan. Okay. Once you have the project plan created of who's going to, what the tasks are, you can then assign those tasks to various people. Okay. People are then provided some level of assignment based on their skill level, because ERP systems can track people's skill level, as well as their availability, for example. So thinking about that, that's not just recording and reporting, this is actually thinking, right? So these systems allow you to essentially assign that, and then ultimately the value is driven by, you can look at the end of the day in an ERP system, when a project is completed or along the way, you can measure productivity, realization, and profitability. So we've talked a little bit about the difference between accounting and ERP systems, and we've even covered some examples of essentially organization types that have different needs and different processes that they do in their cycles to be managed within an accounting information system or an ERP system. What I want to focus on now is a little bit more about, there's other kinds of software out there that's being used by businesses all over, and there's a lot of acronyms floating around too. So I wanted to cover a few. For example, if you are in an organization that's very sales-based, you've got a heavy sales force, you've got lots of people all over the country or potentially all over the world doing your sales for you. ERP and accounting are very helpful, right? They're very good categories of software to help manage what happens from that. But are they really good at managing the sales activities? Maybe, maybe not. Generally, that's not their strong point. Sometimes you need something called a CRM, or Customer Relationship Management software. Sometimes that's also coupled with something called SFA. Okay, I'm using these phrases because they're used in the industry quite a bit. SFA is Sales Force Automation. Okay, that's what they stand for. If you're a sales organization, you really want that. Why? Okay, well, CRM is essentially focusing on what is the customer doing? Okay, how do we record transactions with the customer? That's the first thing. But also, how do we deal with things like, what did they order in the past? I may want to talk to them and find out what they've been doing. I might want to record every time we've sent them an email from our marketing department. I might want to find out who they've called in for, what sort of things they've dealt with. So that's what CRM can do in a nutshell. But then you have SFA, Salesforce Automation, which actually focuses more on how does that sales force, that large one we described out there that's all over the place, how do they come together to look at their pipeline of opportunities, the opportunity management, what are we doing with each of these people that we're pursuing business with? What are we doing to close? How close to a closing are we on that particular deal or process? And ultimately, looking at that as a way to measure, back to measuring in accounting information systems, how we're doing in both customer acquisition and potentially even customer retention and closing. So sales organizations have their own sorts of needs, and that is an example of software applications that fit. Another one, and we've touched on manufacturing already, is in organizations that do quite a bit of manufacturing and product development, as well as having to store the information, not the information, but their products and goods and services or goods that they've produced, we have to look towards other types of software to help manage that. So, for example, manufacturers of any kind, I don't care if it's clothing or widgets or medical devices, it's very helpful to use something called PLM software, another acronym, but that stands for Product Lifecycle Management. What that really does is it helps kind of go from the engineering or drawing stages of a product, the whole development process and cycle, all the things that go on to help figure out what it is that we're going to make this and track all those activities around that and who's doing what and creating projects around that whole thing. Turning it into something where we can say, oh, well, now that it's going into production, we might have to create a bill of materials or some sort of a schematic for that, okay, or a particular drawing. And then we essentially manage it with the accounting system and the ERP system to ultimately delivering a product lifecycle experience. So when someone wants to say, how's this product doing? When did we develop it? What does it look like? Are the batches coming out appropriately? Are we tracking what happens with the lots and the serial numbers and everything else? All this stuff goes into an ERP system coupled with a PLM system, as an example. Lastly, one very popular product type is called Warehouse Management System, or WMS. WMSs are usually put as attachments, if you will, to the accounting and information systems because they're used to help determine and help people manage how to best hold lots of product. How do we deal with receiving? How do we put things away in the proper place? What are the proper places to put them? How do we segregate them by types of product? How do we manage our space? Okay. How do we look at it's time to ship this stuff. How do we make sure we effectively pick things from the shelves and essentially put them onto the pallets so that they can be shipped out the door? It's called staging. So WMS products are very, very strong for that. So again, depends on the kind of a business that you have. You'll determine what sort of software can be then added to your accounting information system environment to make it much more effective for you to manage your business.